when you're looking at everything that's happening right now in 2020, did you, out of all your years of research, did you ever think that it would come to this position where we've got all these people on the verge of foreclosure and all these people without jobs, and then it's like, do we print till the fingers get sore? Did you ever think we'd get to this position?
I did, but I didn't think that it would be a pandemic, although it is the absolute perfect excuse. And I also thought that this would happen like 2021-ish, 2020-ish, because they're already resetting the global financial system, though they've postponed parts of that for a couple of years through, the LIBOR transition into, in this country, the SOFR. They just ran a big test on it in October, 80 trillion out of the 640 trillion in notional value contracts that have to reset. And I think it's very telling that it is absolutely dead silent on the results of that auction and that transition. And then shortly thereafter, they come out postponing parts of it until 2023. I think that means it was a huge failure and they needed to buy more time. That's my opinion. That piece I can't prove because it's dead silent. You can't find any of the data.
What do you think is going to happen? We're kind of in this almost like a pause button right now until basically the new year and some of the political and election situation gains more clarity. But nobody knows exactly what's going to happen, but what do you foresee happening here in 2021?
Well, I think what they're trying to do is wallpaper over this again, and it's a huge experiment. That's the thing. All of this, and especially since 2008, is all a big experiment. So the central bankers will throw something up on the wall and see if it sticks. And the problem is that it's really not sticking. So it's requiring more and more and more ammunition to even keep it looking like it's okay. And you have this, they've decided, a K-shaped recovery where you have the few at the top that have billionaires that have doubled, tripled, 10 times their wealth since March. And you have most of the public that is really struggling. And as you said, foreclosures, which, they've got the moratorium. This is not on all mortgages, but on government-backed mortgages, government-backed student loans, and even those others that got that moratorium, they're going to have to make up for all those lost payments in March. So 2021, frankly, is shaping up to be an extraordinarily, I'll say, interesting year. And the big question for me, because this is really all about confidence. So Wall Street has the confidence that they'll print more money. So every time they talk about stimulus, right, the markets go up. And every time they say it's going to be postponed, the markets will go down, really as a threat. But 2021, there's so many different programs. All the rest of the government programs are going away. Now, will they be reinstated? Probably. I mean, I think we're going to see universal basic income. I thought it was possible to happen before the end of this year, but timing is always the biggest, challenge for any technician. I can tell you what is most likely to happen based on lots of data and history, but I can't tell you exactly when. But that has to be in the cards because we're a consumer-driven economy. And if you don't have people earning money to spend, you have to give it to them. So
I think people really haven't examined that enough and really looked at the data of how many people are behind on their rent and truly how many people are behind on their mortgage and truly how many people have lost their job and are literally right now living off of basically maxed out credit cards. And so it's kind of the $1 million question. Do they let all these people get foreclosed on and go under, and whether it's renters or credit cards, or do they go to the biggest level of money printing? What was the data in 2020? Didn't they print 21% of all US dollar currency was printed that year in 2020?
That sounds about right. But yeah, you
Do you
can
think
see
it'll
it
go
in the
more than that?
graphs.
What do you think will happen? Do you think it's going to go to a level we can't imagine, or do they let everyone default?
Well, number one, it's already at a level that nobody could really imagine. And, it depends on if they feel that we are too small, that it doesn't matter if we fail. Right. And they've definitely chosen and continue to choose the winners and the losers. And here's the thing, the Federal Reserve can't give money. That's Congress's job. What they can do is loan money. And so all of these loans to entities that don't really need the money, but certainly they can buy back their shares of stock. Certainly they can pay out these dividends, which is what's happening a lot. So there isn't even one little tiny doubt of the fragility of this really Jenga economy. And I think what you're really asking is, which piece is going to make everything implode? And there are so many different pieces that are floating around that piece is hard to tell. But yeah, I think they don't have any more tools. I mean, the biggest tool they had are interest rates, right? So if inflation, which is by design in the currency, because for governments, it enables them to levy an invisible tax. They don't have to go to Congress and get approval. So inflation for governments is great. It enables them to just spend more and more and more, because in theory, they're paying off the debts with dollars that have less and less and less value, except that they never really pay off the debts. They just roll it over and the interest goes into the principal and compounds and compounds. So when you have that compounding interest on top of all of the money printing, I mean, if you or I did it, we would have been living underneath a bridge a long time ago. And, unfortunately, there are a lot of people that are living like that don't have access to those credit cards. And we are seeing the default rates starting to spike in a number of the different areas, because really since 2008 is really when the system died, regardless of what anybody said. And that's actually when it was 2009 when Christine Lagarde did this interview, the head of the IMF at that time. Now she's the head of the ECB. But at that time, she did an interview on Bloomberg News. And don't hold me to this because I haven't counted lately, but I believe she used the term reset something like 27 or 56 times. I mean, like every other word out of her mouth was talking about the need for a financial system or this kind of reset or that kind of reset. And that's actually when I started talking about the reset in earnest, because I could definitely see the system died. I mean, the tools that the central bank has are interest rates and debt. Those are the tools. So if you've got the world anchored somewhere near zero, and then of course they did the big experiment with the negative rates and that didn't work the way they thought it would work. So, if you lose your largest tool, then what do you have? All you have is money printing. That's all you have. So yeah, the money printing is going to go on, but just keep in mind, even at these low rates, look at the deficits that governments really around the world are running, and understanding the fact that if a government is running a deficit, that means that they're not able, through the taxation and all the means that they have for income, they are not able to pay their debts, right? And so they're borrowing it, and let alone paying all the interest. on those debts. If you're compounding interest, where does that leave you or me, the normal person on the street?
Yeah, I mean, it's literally the greatest con job in the history of the world. And so, and it's interesting, so many of the social things are happening right now while the biggest con job is happening, because it's a great type of psyop that kind of can kick the can down the road. But I guess my question is, as they're kicking, and I want to get into your idea of what a monetary reset and all the research you've done into that, what it looks like through your lens. But before we get there, kicking the can down the road, you said you were talking about their tools, and you've done far more research into central bank digital currencies or government digital currencies than I have. I'm sure of that. But from what I've researched into it, to me, it seems like they're telegraphing their last tool. And of course, there's the big brother aspect of, yes, they can monitor what you're doing. But I look at it as probably more so a tool in their belt that allows them to kick the can down the road. And you said or interest rates are their biggest tool. Well, then, do they try to take that tool a little further and go negative? And you've got your app on your phone and they're spending it, and they try to let that run for a couple more years. What is your thoughts on the central bank digital currencies? Do you think that's in the cards as a means to try to put the drywall back on?
Well, okay. For one thing, and that was really a great statement that you made, and there are a lot of pieces in there. But for one thing, we are always assuming, or people always assume, that they want to keep kicking the can down the road. And the reality is they only want to kick the can down the road until they're ready to make that shift into the new currency. Now, ultimately, I am absolutely in agreement with you. It will be a digital currency. However, what the digital currency really enables them to do, and what negative rates really are, is attacking the principal. So the inflation, we've lost like 97, 98% of the purchasing power, according to the Federal Reserve, which jury rigs their data anyway. They just changed the accounting so it looks different. Having said that, if they're already at zero in terms of purchasing power, which they're close enough to say, then the negative rates will enable them to attack your principal, because that's what negative rates do, right? This is why having physical gold and silver outside of the system is so critical, because otherwise, whatever you have inside of the system, it is the big brother asset, or aspect. It's not so much them seeing what you're doing, it's having them the ability to control your behavior, right? They call that perception management, and President Reagan was really the one that installed that in earnest into the government. And manipulating the price of gold, admittedly, I mean, I can show you lots of data on them admitting to manipulating the price of gold, which is real money, with full utility right across the global economy, and exchanging that for everything being digital. If they don't like your politics, or they want to have direct impact on your spending, right now it takes about 18 months for the central banks to issue a policy and for them to see the results in the general economy. With the Fed Now account, which is those digital dollars, that account, then if you're not spending money fast enough, because we are a consumer-driven economy, they just make it visible enough for you to go, wow, I'm not spending my money and it's evaporating, it's going away. So I'm much better off putting it into anything that can perhaps hold its value better. So I'm thinking, honestly, that once we do go to a full digital currency, that will also enable the Federal Reserve, but this is true globally, to do that, to give that universal basic income directly to consumers and control that piece, either more or less, depending upon how much they want you to spend or not spend. But, where is that money coming from? That's a button push. Takes absolutely zero effort to create that, right? It's just a push of a button. The reason why gold has been money for 6,000 years is because it takes time and labor and effort to pull it out of the ground. It's indestructible. So we can recall all the gold in electronics or in coffee filters or in even plated stuff, right? We can recall and recover all of the gold that's ever been mined, regardless of its form. And it can be reused in the financial system, in the art, in electronics, in manufacturing, in every single area of the global economy. That is the piece that most people do not understand, and I never hear anybody talking about it but me. Doesn't mean that people aren't, because I certainly don't listen to everything, but they just talk about it like it's an old relic, when what it's going to do is preserve your freedom. And it holds its value because of its full utility. These digital currencies will be used as a tool. It's not about monitoring you. It's about controlling what you do. And I used to think that I would really convert on the other side of this mess, because when they go to the digital currency, it does not mean that it's over. What that really means, when they fully introduce that out and it gets utilized, that will, I think, most likely usher in a period of hyperinflation. Because right now, that hyperinflation from all that money printing that they've been doing, in earnest forever, but really since 2008, has been going into the stock market, the bond market, the real estate market, the derivatives markets, these markets that they are desperate to keep inflated. Because what tools do they have left? They don't have any. So I don't know. Did I answer your question, or did I go off on a tangent?
That's beautiful. So one of the things that you said that I thought was interesting at the beginning of your response to the question was that one thing that people miss is that the currency
that they want to keep this going.
Yeah, that they want to keep it going, whereas you said they actually want to move it to where they want to move it. What did you mean by that, and where do they want to move it? And that's a unique viewpoint that people don't, because I guess I'm in the camp that they wanted to keep it moving, and I had never really thought about that.
Well, stop and think about it. If they have no tools left, and that's the interest rates, right? So all they can do is grow more debt, then they're kind of like done. But they want to remain in power. So it's all, you said it just right. This is the biggest Ponzi scheme in history. So it's all about the confidence. But their goal is to make this transition. And it really is also all about wealth transfer. It's all about wealth transfer from the many, so from the public to the few. That's even true when you look at the sharing economy. You have a few people that own everything, and then you have the masses that own nothing, and they have to lease. So the reality is when you're done and you have no tools left to use, you have to recreate the game. And when you look at all of the experimentation, because honestly, it's been experimentation since 1913. Okay, we'll do this. This works for a while. That doesn't work anymore. So we're going to have to change the rules of the game, get rid of the gold, because that was the kickoff, but gold created restrictions on governments and central banks. So they had to take the gold away from the population. Okay, they ran with that for a while. Bretton Woods, everybody tied to the dollar. But, you know, we were abusing that privilege and printing our way out of the Vietnam War. So confidence was lost of other governments in the US dollar. There was a run on the dollar. Nixon went, boom. Now governments can no longer convert dollars into gold, right? And when he did that, he handed over full power of inflation to central banks, to private corporation and a bank. And a bank, hey, there's a few people that collect interest, everybody else pays that interest. But they ratcheted interest rates up to over, the ones that they control fully, up to over 21%. And so in the early 80s, and they've had a very long ramp time as they've used that interest rate, lowering them to inspire people to take on more debt and create higher inflation, and raising them when that inflation got too visible so that people borrowed less and therefore spent less. Well, they're at zero. Where do you go when you're at zero? Every single, without exception, every single attempt to raise rates above zero since 2009 has failed. Every single one, no exception to the rule. So they know it's game over. I mean, Christina Gorba, I'm butchering her name, but the current head of the IMF just recently came out with a paper talking about the new Bretton Woods when they changed the system again.